Sales minus gross profit, we will get cost of revenue from operation. Net profit ratio, your formula is net profit divided by net revenue from operations into 100. Your formula is fixed assets plus current assets minus current liability, so that you will get the net assets. So how to find out gross profit? Revenue from operations minus cost of revenue from operations. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the last session of your 5th chapter, that is accounting ratios, and this is from part B of your 2nd PUC syllabus. So let us quickly begin or quickly recall what we have discussed in a previous session. So in a previous session, I have covered this topic, that is we were discussing about problems on activity or turnover ratio as well as problems on profitability ratio. As I told you, a very important question for 12 marks where they will combine these two ratios and ask for 12 marks, where 3 ratios will be on activity ratio as well as 3 more ratios will be on profitability ratio, where each ratio carries 2 marks each. So they'll ask you 6 calculation of ratios. So each ratio carrying 2 marks. So overall weightage of this problem will be 12 marks problem. So in today's session also, we shall continue with the question paper problem itself. That is, from these 2 type of ratio, what are the questions they have asked in your previous question paper. In the last session also, we have discussed the same. In today's session, we shall see quite different problems on these 2 type of ratios. What they have asked in your question paper. Now let us see, this is a question paper problem. The following is a summarized profit and loss account for the year ending 31st-3/2023 and balance sheet as on that date. So trading and profit and loss account for the year ending 31st-3/2023 they have given, where we have opening stock, purchase, gross profit, and here sales, closing stock, administrative expenses, selling expenses, interest and net profit, and in the credit side we have gross profit here. Next, they have given the balance sheet also, balance sheet as on 31st-3/2023, where they have given us certain liabilities and certain assets. Now using this, let us see what type of ratios they have asked us to calculate and how to calculate. And this is the same question paper which is asked in your model question paper of your PU board. So let us see how to answer this question. Now they have asked us to calculate inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, gross profit ratio, operating ratio as well as net profit ratio. Usually if you see your previous year question paper, most of the time they have asked this 6 ratios. So go through that carefully, and whether they have given profit and loss account and asked us to calculate this ratio, how to calculate, as well as if they give trading profit and loss account and balance sheet, then how to calculate. Okay, so let us see the solution here. So first we shall start with stock turnover ratio or inventory turnover ratio is equal to, your formula is cost of revenue from operations divided by average inventory. Okay, so you have to measure in terms of times. Now cost of revenue from operations. So let's see whether they have given in the question. Now if you see your trading account, they have not given us cost of revenue from operations directly. So how to find out? Usually your formula to find out cost of revenue from operation is equal to revenue from operation minus gross profit. Revenue from operation means what? Sales. Now they have given us sales 2 lakh and we have gross profit also. So gross profit is 50,000. So sales minus gross profit, we will get cost of revenue from operation. So we shall see cost of revenue from operations is equal to sales minus gross profit. Sales minus gross profit. So how much sales they have given in your trading account? So if you see the question here, 2 lakh minus 50,000. That is rupees 2 lakh minus rupees 50,000. So that will be rupees 1,50,000. The cost of revenue from operation is done. Now we have to find out the average inventory. So average inventory average inventory is equal to, now using the information what they have given, so your formula is opening, inventory means what? Stock. So how to find out? Opening stock plus closing stock divided by 2. Okay, so let us calculate. Opening stock plus closing stock divided by 2. Okay, so what is opening stock? That is 65,000 plus 15,000 divided by 2. 65,000, that is rupees 65,000 plus rupees 15,000 divided by 2. So how much you'll get? That is 65,000 plus 15,000 plus 15,000. So that will be 80,000 divided by rupees 80,000 divided by 2. That is equal to rupees 40,000. So 65 plus 15, that is 75, 80,000 divided by 2, that is 40,000. Now you can apply the formula here, that is stock turnover ratio is equal to, cost of revenue from operation is rupees 1,50,000 divided by average inventory. Inventory we have found out, that is rupees 40,000. So 1,50,000 divided by 40,000 divided by 40,000 is equal to 3.75 times. So inventory turnover ratio is measured in terms of times. So 3.75 times. So hope you are clear about it. When they give trading profit and loss account and balance sheet, you have to solve like this. Now moving on to the next one, trade receivable turnover ratio. Your formula is net credit revenue from operations divided by average trade receivable. Now let's see whether they have given net credit revenue from operation. Revenue from operation means what? Sales. So they have not given net credit sales. So sales itself is considered as net credit revenue from operation, that is 2 lakh. Now we know sales directly, that is net credit revenue from operation divided by average trade receivable. So how to find out average trade receivable? Debtors plus bills receivable will be average trade receivable. So average trade receivable is debtors plus bills receivable. So that is 15,000 plus 12,500. So we know net credit revenue from operation, that is your sales. So we have to find out average trade receivable. So average trade receivable. Average trade receivable is equal to debtors plus bills receivable. Now how much is debtors? So debtors is 15,000 plus 12,500. Rupees 15,000 plus rupees 12,500. So that will be 15,000 plus 12,500. So 27,500. So net credit revenue from operation is your sales. So let's see how much it is. So sales is 2 lakh. So 2 lakh divided by 27,500. So you will write like this: trade receivable turnover ratio. Trade receivable turnover ratio is equal to, that is net credit revenue from operation, it's nothing but your sales, that is rupees 2 lakh divided by rupees 27,500. So rupees 2 lakh divided by 27,500. 2 lakh divided by 27,500. So you'll get 7.27 times. 7.27 times. 7.27 times. So hope you are clear about it. That is trade receivable turnover ratio. Now coming to trade payable turnover ratio, we have net credit purchase divided by average trade payable. Now what is this net credit purchase? So they have given us purchases, correct? So 2 purchases itself is considered as net credit purchase, that is 1 lakh. So we shall write here, so net credit purchase. Net credit purchase is equal to, so how much is net credit purchase? Net credit purchase is 1 lakh, it is rupees 1 lakh. Now, average trade payable they have not given us directly, we have to find out. So, average trade payable is equal to, so for average trade receivable it is debtors plus bills receivable. Now, for average trade payable then creditors plus bills payable. So, average trade payable is equal to creditors plus bills payable. So, 25,000 plus 15,000. So, creditors plus bills payable. So, that is how much? 25,000 plus 15,000. 25,000 plus 15,000. So, this will be 25,000 plus 15,000 rupees 40,000. Now, you can apply the formula. So, trade payable turnover ratio. Trade payable turnover ratio is equal to, that is net credit purchase, that is rupees 1 lakh divided by average trade payable, that is rupees 40,000. So 1 lakh divided by 40,000. So it will be 2.5 times. So this is how you will calculate trade payable turnover ratio, and this is how you will calculate the trade receivable turnover ratio. Now moving on to the next one, gross profit ratio. Your formula is gross profit divided by net revenue from operations into 100. Now let's see whether they have given us directly. So gross profit. So gross profit will be there, correct? So gross profit is how much? 50,000. Net revenue from operation means your sales, correct? So how to find out net revenue from operation, that is your sales is 2 lakh. So 50,000 divided by 2 lakh into 100. So gross profit is 50,000 divided by 2 lakh into 100. Rupees 50,000 divided by rupees 2 lakh into 100. So this is measured in terms of percentage. 50,000 divided by 2 lakh into 100. So this will be 25%. This is gross profit ratio. Moving on to the next one, operating ratio. This is cost of revenue from operation plus operating expenses divided by net revenue from operation. Cost of revenue from operation already we have calculated. So let's see, cost of revenue from operation is 1,50,000. Cost of revenue from operation is 1,50,000. Now we have to find out the operating expenses. Net revenue from operations we know. So net revenue from operation is 2 lakh. Now we have to find out the operating expenses. So operating expenses is equal to, now if you see the question, what are the operating expenses we have? So we have administrative expenses 15,000, selling expenses 12,000. That is administrative expenses plus selling expenses. So administrative expenses 15,000 plus 12,000. Rupees 15,000 plus rupees 12,000. So that is equal to 15, 25, 26, 27,000. So So 15,000 plus 12,000, that will be rupees 27,000. Now we have to apply the formula. Operating ratio is equal to cost of revenue from operation is rupees 1,50,000 plus operating expenses rupees 27,000 divided by net revenue from operation, that is 2 lakh rupees, 2 lakh into 100. So 1,50,000 plus 27,000. So that will be 1,77,000. So let's check once again. 1,50,000 plus 27,000. 1,77,000 divided by rupees 2 lakh into 100. So 1,77,000 divided by 2 lakh into 100. So it will be, that is equal to 88.5%. 88.5%. So this is about your operating ratio. Moving on to the next one, net profit ratio. Your formula is net profit divided by net revenue from operations into 100. So we have directly, so how much is net profit? So if you see here, net profit, yeah, the balancing figure, 20 lakh divided by net revenue from operation is 2 lakh. So 20,000 divided by 2 lakh into 100. Rupees 20,000 divided by rupees 2 lakh into 100. So 20,000 divided by 2 lakh into 100. So this will be 10%. So hope you are clear about it. This is how you will calculate the stock turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, gross profit ratio, operating ratio, as well as net profit ratio for your 12 marks. Now moving on to the next problem from this chapter, where they have asked a quite different problem for 12 marks. So from the following information, calculate net assets turnover ratio, fixed assets turnover ratio, working capital turnover ratio, and these three ratios already we have discussed: gross profit ratio, operating ratio, as well as net profit ratio. Now this is also a question paper problem. You can go through this easy, just you have to know the formulas. Okay, now let us see what are the information they have given. They have given fixed assets and current assets, current liabilities, revenue from operations, cost of revenue from operation, net profit they have given, operating expenses. Now how to find out the respective ratios? Now net assets turnover ratio, your formula is revenue from operations divided by net assets. Now if you see the question, they have not given net assets. So how to find out? Your formula is fixed assets plus current assets minus current liability, so that you will get the net assets. Revenue from operations already they have given 20 lakh. So we have to find out the net assets now. So how to find out the net assets? Your formula is net assets is equal to so what is the formula? Current assets or fixed assets plus current assets minus current liability. So current assets plus fixed assets minus current liabilities. Now how much is current assets? Current asset is 4 lakh plus 16 lakh rupees 4 lakh plus rupees 16 lakh minus current liability is, it is rupees 2 lakh. Rupees 2 lakh. So here 16 plus 4, that is 20. 20 minus 2 lakh, that is rupees 18 lakh. So this will be net assets. Now we shall apply the formula. Net assets turnover ratio. net assets turnover ratio is equal to revenue from operations. Already they have given revenue from operation is 20 lakh rupees, 20 lakh divided by, that is net asset, already now we have calculated, that is rupees 18 lakh. So this will be 20 lakh divided by 18 lakh. 20 lakh divided by 18 lakh. So this will be 1.11 times. 1.11 times. So this is your net assets turnover ratio. Moving on to the next one, fixed asset turnover ratio, net revenue from operations divided by net fixed assets. Now let's see whether they have given. So net revenue from operations, that will be 20 lakh divided by net fixed assets. So fixed assets is 16 lakh, correct? So 20 lakh minus 16 lakh. So net revenue from operations 20 lakh. So 20 lakh divided by net fixed assets. So net fixed assets, fixed asset is 16 lakh rupees, 16 lakh. That is equal to 20 lakh divided by 16 lakh. So this will be 1.25 times. Now moving on to the next one, working capital turnover ratio. Net revenue from operations, already we know, that is 20 lakh divided by working capital. So how to find out working capital? Working capital is equal to current assets minus current liabilities. Current assets minus current liabilities. So how much is current assets? Current assets is 4 lakh minus 2 lakh, current liability. That is equal to 4 lakh minus rupees 2 lakh. So this will be rupees 2 lakh. This is your working capital. Now apply the formula. Working capital turnover ratio. Working capital turnover ratio is equal to net revenue from operations, that is 20 lakh rupees, 20 lakh divided by working capital, that is rupees 2 lakh. So 20 lakh divided by 2 lakh. 20 lakh divided by 2 lakh, that will be 10 times. So this is your working capital turnover ratio. Moving on to the next one, gross profit ratio. Your formula is gross profit divided by net revenue from operations into 100. Now let us see whether they have given us gross profit. So they have not given. So how to find out? Revenue from operations minus cost of revenue from operations. So this will be the gross profit. So how to find out gross profit? Revenue from operations minus cost of revenue from operations. So we shall find out gross profit. Gross profit is equal to revenue from operation minus cost of revenue from operations. Revenue from operation minus cost of revenue from operation. So revenue from operation is 20 lakh minus 8 lakh. That is equal to rupees 20 lakh minus rupees 8 lakh. So this will be rupees 12 lakh. Now gross profit we got. Now we can apply the formula. Gross profit ratio is equal to rupees 12 lakh divided by net revenue from operation is how much? That is 20 lakh. So divided by 20 lakh into 100. 12 lakh divided by 20 lakh into 100. So we will get 60%. 60%. So this will be your gross profit ratio. So 60% will be your gross profit ratio. Moving on to the next one, operating ratio. The formula is cost of revenue from operations, already we know, plus operating expenses divided by net revenue from operations. So let us see cost of revenue from operations. Cost of revenue from operations is 8 lakh plus operating expenses is 1 lakh divided by net revenue from operations. So you can directly calculate here. So you can apply the formula cost of revenue from operations, that is 8 lakh plus 1 lakh operating expenses. Rupees 8 lakh plus rupees 1 lakh divided by net revenue from operations, already we know that is 20 lakh. Rupees 20 lakh into 100. So this will be rupees 9 lakh divided by rupees 20 lakh into 100. So 9 lakh divided by 20 lakh into 100. So I'll get 40. So 9 lakh divided by 20 lakh into 100. So you will get 45%. So this is your operating ratio. Now moving on to the next one, net profit ratio. Your formula is net profit divided by net revenue from operations into 100. So how to find out net profit? So to find out the net profit ratio, your formula is net profit divided by net revenue from operations into 100. Now let us see the question, whether they have given us net profit. Yeah, they have given 4 lakh. 4 lakh divided by net revenue from operations, that is your 20 lakh. 4 lakh divided by 20 lakh into 100. Net profit is rupees 4 lakh divided by net revenue from operation is rupees 20 lakh into 100. So 4 lakh divided by 20 lakh into 100. So this will be 20%. So this is 20%. So this is how you are going to calculate your all the ratios. So what are the ratios you have to calculate in this question? So we had calculated net assets turnover ratio, fixed assets turnover ratio, working capital turnover ratio, gross profit ratio, operating ratio as well as net profit ratio. So my dear students, hope you have understood this chapter. Very easy chapter. Just you have to know the formula and how to apply the formula. Easily you can score 12 marks. See you all in my next session with a new chapter. Till then, take care. Thank you.